60-minute chart, you can see we had a big sell-off, a big rally, equally big rally. The bears want, excuse me, my voice has been bad for a couple of weeks. I'm hoping that my cold finally goes away. The bears want a major trend reversal, a double top, slightly higher high. But when a rally looks like this, the major trend reversal has very little chance of being successful. However, if it goes sideways for if we go sideways for several bars, maybe form a small double top in here, then the probability for the bears to go up. Excuse me. The bulls are hoping that this is a bull flag and that we continue higher. But this was a strong minor reversal, strong enough so that the market probably will have to test back down here in the next few days, and therefore we're probably going to be in a trading range for a day or two. Tomorrow they have the vote on the government shutdown, and the government shutdown obviously is a big deal, but I think in my adult life the government has shut down 18 times. And it's always brief, a day, a week or two, and the market is a temporary interference with the market. Weekly chart, today's Thursday, one more day left. Probably not going to be a big bull trend bar like the past 2 weeks. And if the bears can get to close near its low, it would be a reasonable sell signal bar. I think these two bars are marking the end of this year-long rally. Sometimes you get one more push up, so sideways for a few bars, and then one more buy climax. But when you get this late in a bull trend, the strongest pair of bull bars late in a bull trend, it usually is an exhaustive move. Exhaustion does not mean reversal into a bear trend. It simply means end of the bull trend for 10 bars or so. 10 bars on the weekly chart would be 2 or 3 months. So we'll probably start to do this or this or this anytime soon within the next week or 2 or 3. Big down, big up, big confusion. We reversed up, but we did not break strongly above Tuesday's high, and therefore we're just back to where we were. And it's actually fairly a neutral thing. When you get a reversal, either a 1 day or a 2 day reversal, usually the market does not continue into a big trend. It usually enters a trading range because it generates confusion. Strongly down, strongly up, confusion. On my upside down chart, bear trend going on a long time, strong minor reversal. The bulls could then not get a major reversal. Another strong minor reversal, and the bulls are trying to get a major reversal after the minor reversal. Whenever you get a really strong minor reversal and then the market tries to reverse the second time has a much better chance of becoming a major reversal into an opposite trend. However, when the final leg down is in a tight channel like this, usually you're not going to get a major reversal without at least a double bottom. So this chart is probably not going to go up much today. To me, I think this entire sell-off looks like a bull flag after this rally. Even though it fell below this low, it still could be a pullback from this reversal, and therefore it could lead to a lower low major trend reversal. If the bulls take control here and it goes up, where does the bull trend begin? Well, technically this is the low price, it's below here, so this is the start of the bull trend. But in my mind, this might be the start of the bull trend. Again, this chart is upside down, so for the E-mini, I'm talking about a bear trend and a top. Wedge sell-off, 1, 2, 3, testing the 15-minute moving average. Fairly tight channel here, fairly tight channel here. First reversal up probably will be minor. It will probably have to go sideways more. Very strong bull trend. The first time the market gets to the moving average, traders buy it. The first time the bears do anything, bulls buy it. The first close below the moving average, the bulls buy it. The first time there are gaps above the highs of bars, the bulls buy them. We have gap bars. Gap between the high of the bar and the moving average usually leads to a leg up. We might go sideways more before we get the leg up. However, that leg up usually leads to the final leg of the bull trend before a major trend reversal. So bull trend, bear breakout. If we get a rally in the first hour or two, the bears will have a 40% chance of a major trend reversal. More likely, the 2-day big up, big down is going to result in a trading range. We may go a little bit above yesterday's high, but probably not a lot above. Not a good looking buy signal bar, 1, but it's a gap bar, and the bulls are hoping for bull trend resumption. More likely sideways here. Yesterday, on the daily chart, yesterday's high is just above Tuesday's high, so therefore it's not really a high one buy signal bar, but it's close to being one, and the bulls want to get above yesterday's high and get follow through buying. However, I think more likely Tuesday was a big enough bear bar, so that will probably go sideways, and then tomorrow we have that vote on the government shutdown. Creates a lot of uncertainty. I think that reduces the chances of a big trend day today. Most likely, when you get a rally following gap bars, it's the final leg of the bull trend. And therefore, even if we rally for an hour or two, we'll probably get a reversal. Reversal probably will lead to a trading range and not a bear trend. Possible low of the day, right? Possibly we could keep going up like this. Not likely. More likely, we've entered a trading range. The bears see the tight channel. They assume the first rally attempt will not get far. They see the bear body on 1. And that will make them sell, not at the 1 high, but maybe a 50% pullback where we are now, looking for a test back below the 1 high, betting that this is not a resumption of the bull trend. Instead, it's a bull leg in what will become a trading range. I want to open my examples folder, the examples file. Bull trend, pull back to the moving average, hard to see. And here we have a bar completely below the moving average. A gap bar means the bears are strong. They're strong enough to put a bar completely below the average price, and usually leads to a resumption of the bull trend. However, that resumption of the bull trend usually fails around the prior high, and you get an attempt at a major trend reversal. The bears had one here, but it did not lead to a major trend reversal. I'm going to have to collect some more of these. Here's an example of one that led to a major reversal. You can see the limit order bears who sold either the one high and 1 or 2 points higher, or the bears who sold 1 or 2 points higher probably will make money. They need 3 to dip 1 tick below the one high so they can get out. The bulls know that, and they will try to stop the bears, but the odds are a trading range, so you assume the bears will make money, which they just did. The bears are hoping this is an endless pullback and a bear trend that's going to take us all the way down to the next support level here. But they're probably going to be disappointed, just like the bulls were disappointed. Trading range likely. Limit order market. Traders make money selling at the high and higher, buying below bars and lower. If this was a pretty good bear trend, traders would sell below 3, but it's not. A lot of bull bars, a lot of reversals. It's probably a bull flag in this bull trend, and therefore not a lot of bears willing to sell below 3. Down on 1, up on 2, down on 3, up on 4. Multiple reversals and following a bear leg in what appears to be a trading range. Probably a trading range open. Yesterday's high, the all-time high, is a magnet. However, if we get up there, the bears will probably attempt to get a major trend reversal. With tomorrow's vote to shut the government down, the odds are today will probably be neutral. After a 2-day reversal, down and up, the odds are today's probably going to be more neutral. After a buy climax yesterday, 75% chance we're going to get at least a couple hours of sideways to down trading, which we've begun. The bulls see 2 as a pullback, and the bulls see 2 as a breakout of a bull flag, and 3 as a pullback. 4 is therefore a buy signal bar, similar to 7 yesterday. And just like 7, a big bar, a lot of trading range price action, it's probably not going to lead to a bull trend. It probably has to go sideways first. Yesterday, this did lead to a bull trend, but it went sideways for an hour. And that's probably the same here as well. While we might have seen the low of the day, I think this looks more like a limit order market. Too many traders tried to buy the 3 low, believing that it was not going to lead to a bear trend. As soon as 3 closed, a lot of traders were sitting by the market, and 4 never fell below 3. Traders bought the 3 close, they're less willing to sell the 4 close, because the 3 close is at the bottom of a bear channel, possibly the bottom of a trading range. The 4 close, the 4 high, are in the middle, and bears would rather sell higher. What happens if we fall below 4? Probably buyers. What happens if we fall below 1? Probably buyers. This is probably a bear leg in a trading range, and we're near the bottom. So more likely buyers down here than sellers. If we do get a pair of consecutive big bear bars, then we're getting a bear breakout below a bull flag, and it could lead to a swing down, but we do not have that yet. Bull trend, bull flag, bear breakout. This is what the bears need. A pair, 2 or 3 or 4, here about 6 bear bars, but at least 2 decent sized bear bars. And the bears need that here, but they're probably not going to get it. I said bears would sell above 1 because it's the first breakout above a tight channel and had a bear body. This is the second reversal up, plus it has a bull body. Bears will be less willing to sell above 4. For the bulls, not a great buy, even though a possible low of the day. We have 3 bars here with exactly the same low. So it's a ledge, a magnet. It would be a stronger magnet if it was 4 or 5 bars. But right now I think we'll probably get below the 4 low at some point in the next hour. Small ledge, tried to rally. It's a magnet, usually has to get below. And once it gets below, it usually pulls back above. Here, it not only pulled back above, it rallied. 5, this is a 6 bar ledge, 6 or 5. And a 6 if you count this. I think it's more bullish than bearish. We have moving average gap bars, strong bull trend. So probably always in long, but we probably are going to have to get below these lows and maybe below this low. I mentioned the VIX, a few times lately. It's a measure of volatility and pretty much goes opposite to the E-mini. Here's a 5-minute chart, 60-minute chart. The E-mini is at a new high, so you'd expect the VIX to be at a new low, but it's not. It's well above the low, so something's not right. This is telling us the market is expecting increased volatility, which usually means a sell-off. So it's interesting that the VIX is up a lot from this low. Back to the E-mini. Probably going below 4, maybe below 1, but bear channels, so also probably buyers either below 4 or below 1. If the bears keep trying to get below there and fail, then we could get a reversal up. But I think the bears are willing to try more. So I think we're going to get down here at least one more time. Bulls are hoping that 2 is a breakout of a bull flag and that 3 and 7 is a double bottom pullback from that breakout. But we probably have to get a little bit lower. To take this buy, I would want 8 to close at or above the moving average before I would consider buying it. If the bulls get that, I think it's a reasonable swing setup for a possible test of yesterday's high. The bulls need a pretty good reversal bar here because it's a magnet for low. Also, we're reversing up from 2 ticks above the magnet, and that usually is not close enough, so we probably have to go lower. I am scalping in here, right? Am I willing to swing trade or short? No, I still think that this is a bear leg in what will become a trading range, and I don't want to be. I did sell during bar 7, right around the close of 7, and I scalped out. I don't want to be selling too low in what is likely a trading range. Also, I said I thought the market had to fall below the 4 low. So I wanted to sell at least 5 ticks above the 4 low because it has to fall 4 ticks for me to make 1 point. The goal has, the bears got their goal below the 4 low. Will the bulls buy above 9? Given that we have decent bear bars 7, 8, and we have a magnet at the low of the day, not a good looking bottom, I think most bulls are not going to buy above 9 unless it's a really dramatic bull bar. Is it sell the close yet? Maybe if 9 closes on its low, but it's a little bit tricky because the odds are today's is going to be a trading range. After a big down Tuesday, big up Wednesday, probably big confusion today. So I'm not particularly eager to sell at the bottom unless I see a lot of strength on the part of the bears. I said when the market has a ledge, it's a magnet. The market usually falls below it, and it usually pulls back above it. Ledge, bulls tried to rally, could not, broke below the ledge, and then we pulled back, and the pullback grew into a bull trend. A ledge, broke above it, pulled back into it. A ledge bottom, broke below it, pulled back into it. For the bulls, a lower low double bottom, but 3 bear bars, probably sellers above 10, and a lot of bulls will want a micro double bottom. Whenever you have a trading range but the leg down is strong, a lot of bulls prefer a second entry buy. Second entry sell at the top, second entry buy at the bottom, second entry buy at the bottom. If 10 is a huge bull bar, some bulls will buy above 10, but anything less than a really great bar, I think most bulls will wait to see if we get a second entry for the bottom. Bar 10, getting near the end of the first hour, bar 12, and the bears do not want the first hour to be a very strong bear bar, and therefore we're probably not going to go a lot lower over the next 10 minutes. The bears would rather, the bulls, they rallied strongly yesterday. They want this to be a weak bear bar, so they want the body to be small, and they want a tail on the bottom. And therefore they may buy over the next 10 minutes to put a bigger tail on the bottom of this bar. Possible low of the day, but 3 decent bear bars. The bulls probably will need a micro double bottom. The bulls are trying to weaken the bear case. They're trying to make this a bad looking bear bar on the 60-minute chart. While I did not buy above 10, I also did not sell, so I'm currently flat. This is the midpoint of yesterday's range, and therefore a target. For the bulls, it would be a 50% pullback from the rally. The bears want to go down to the next support level, 60-minute moving average, which is also the bottom of this channel. We have a breakout pullback channel, 3 pushes, 1, 2, 3. So there's a magnet there as well. So 60-minute moving average, here, 50% pullback, all magnets. Getting near the end of the first hour, and the bears looks like they're going to be successful in creating a pretty good bear bar. 11 is the bulls giving up. They were trying to make this a bad looking sell signal bar or sell bar, and they failed. Big bar, climactic. So we may get some bears taking profits and some bull scalpers scalping. Tight bear channel, next reversal up, probably minor. So probably not going to rally much here. Target for the bulls, top of the sell climax here, which is usually around the moving average. But I think we have targets below, so I think we're going lower. Final minutes of the first hour. Bulls again trying to put a tail on the bottom of that 60-minute bar. They're trying to get some kind of a bounce here. They do not want a big bear bar closing on its low, because that would increase the chances that we'll go lower. Unlikely that we're going a lot lower after a 9-bar bull microchannel yesterday, or 8-bar. Bull IOI. We have an outside bar followed by an inside bar. But we have room to the 50% pullback, and we have a very tight bear channel. You can argue it's a second entry buy. Here's the first, here's the second. I would not buy it. If we do go up, we'll have to test down to the 11 close, probably. So this is still a minor reversal. Possible low of the day, but I would rather buy after a rally tests back down and forms a double bottom. Limit order, bulls made money buying the 10 low, even though we had a big outside down bar. So a good bar for the bears, but the bulls made money buying. So it makes this more likely a bear leg and what will end up as a trading range. Possible low of the day, reasonable buy, but more likely sellers above around the moving average and the 11 high. So not a great buy. Into the target zone, right? Top of the sell climax and moving average. Bulls are hoping that we go straight up, but more likely, just like this is a bear leg in a trading range, this is probably a bull leg in a smaller trading range. And therefore, the bulls probably will need some kind of a double bottom before they can get a bull trend. Well, the bears double top 11, but a decent bull bar 12, bull body 13, probably starting to form a trading range, probably buyers below 13. Bulls trying to run stops above 11. Some bears might have tightened their stops to above the 11 high, which I think is dumb, right? Because the 11 high is a magnet. So, if you're a bear and you see that big sell climax bar and the market starts to reverse, you never put your stop above that bar. You either leave it up here or you get out on the reversal, because the odds are we're going above that bar. So it does not make sense to put a stop there on your short when you know you're going to get stopped out. You get out either before you get stopped out, like on the reversal up after the big bar, or you use a wider stop up here. Is it long yet? I don't think so. I think the bulls will probably need a double bottom, or if they get one or two more bull bars, then they can make it always in long. Bears are selling the 11 high, the bull close near the moving average for a scalp at a minimum. For the bulls, similar to the breakout on 2, here we have the breakout 12, 13, 14. The bulls had a pullback on 4, they have a pullback on 15. But I would not buy up here. I would buy below things. The bears had their scalp. They sold the 11 high, and they got their scalp. Bear scalpers selling 15 high, a bad looking buy, and it fell 5 ticks. Allowed them to make their 1 point. Micro double top or triple top or triangle at the moving average, and a big magnet on the 11 low, so we're probably working lower. But with the 3 bull bars, a lot of bears are not eager to sell with a stop, and we might form a tight trading range. What happens around the 11 close? We're in a bear channel, but it looks like a bear leg in a trading range. We're getting multiple good-looking bull bars, and therefore traders will be looking to buy the 11 low, the 11 close, 50% pullback here. Channels can last a long time. It could last all day. I doubt it, though. I think this is going to be a bear leg in what will become a trading range. Trading bear legs and trading range legs often alternate every 2 to 3 hours. So around 8:30, that's a common time for the first leg down to end. A lot of times the first leg is only an hour, which is what we have today. And then the second or third leg is 2 hours or 3 hours. For the bulls, a higher low, a pullback from the reversal up, but tight trading range and magnets below. Plus we're right below the moving average. So not a very high probability buy. Better for the bulls to buy lower, or if we get a strong breakout, then buy the strong bull breakout. Good looking bar for the bulls, possible over the day, but right below the moving average and 5 bar tight trading range. Not a good location to buy. It's good enough to make bears not sell the 17 high. A lot of bulls will wait to see if we get lower, or they'll wait to see if we start to break strongly to the upside. The bulls see this as a bull flag, a bear channel bull flag. I have the 50% pullback here based upon yesterday's range. Other traders will base it upon the entire bull trend. Which would be here and below the 60-minute moving average and below the other magnet here. Right now, I think we probably will not go this far down, but I'll leave it there for the time being. While this is still a possible low of the day, there are several magnets below. 50% pullback from yesterday's range, 50% pullback, the 2-day rally, the bottom of the channel after the spike up, 60-minute moving average. So a cluster of magnets pulling the market down. I don't want to be buying here. But if we break strongly to the upside, then the bears hoping to get down here will give up, and I'll believe that we've seen the low of the day. Right now, I think we're probably going lower. Getting a lot of bull bars closing near their highs, buying pressure, but we still need to break strongly above the average price. Bulls need a strong breakout above the moving average. For the bulls, bear trend, bull breakout, higher low, major trend reversal. It's also around a 50% pullback from yesterday's bull trend. This is probably a bear leg in what will become a trading range. So the odds are we're going up, and the market's deciding if this has finished going down. So far, a good bar for the bulls. Bulls probably need one more bar to convince traders that we've begun a bull leg in the trading range. Big enough bull bar, so the odds are we're going up at least a little bit higher. Bulls want a follow-through bar. Bears want a bear bar of 23. Since at best this is a bull leg in a trading range, the odds are it's going to be disappointing to the bulls. The bears want a second leg trap in a bear channel. So leg 1 pullback, leg 2 failed breakout, and they want a strong bear bar, bar 23. Bulls want the absence of a bear bar on bar 23 at a minimum. They'd like to get a second big bull bar, but all of this trading range type price action makes me think bear leg trading range, bull leg, and a trading range. And it's not going to become clearly bullish, just like it was never clearly bearish. If 23 is a pretty good sized bull bar, then we've probably begun a swing up to the high of the day, maybe to yesterday's high. Let's say it's a bear bar closing on its low. What do you do? Well, if the bulls bought, a lot of them will get out below. Bears might sell if 23 closes at or below the moving average for a second leg trap in a bear channel, betting that we'll just keep working lower. It's always easy to look at one bar and make a conclusion, but when you're trying to change things, usually you need some kind of confirmation. Can you sell below 22? I would not. I think the bears need to sell below a bear bar. Let's say 23 is a bear bar but closes above the moving average, then I would not sell. Good bar for the bears, but bottom of the tight range, just like good bar for the bulls, top of a tight range. Will bulls buy above 24? Probably not. Will bears sell here? Well, a lot of the bears sold and scalped out. The bears need a little bit more, just like the bulls needed a little bit more up here. Whenever you get a surprise bar like 23, usually you get some follow through. Whenever I see a surprise, I usually try to go in the direction of the surprise, at least for a scalp. Can you buy above 24 for a higher low? I would not. I'm not particularly bearish. Look at the past 10 bars. We're still in a tight trading range, but it's slightly more bearish than bullish with this reversal down 24. I am still not swing trading. When this is falling, I just hit sell the market and take my 1 point scalp, and then I get up. I'm not buying above 24. If we start to get big bear bars, I might swing for a test down to the next support levels. Are the bulls going to buy above 24? Another attempt at a higher low major trend reversal? I would not. Not a good looking buy signal bar. The end of the second hour, the first hour, bear bar, not big. Second hour, a doji bar, inside bar. So not bearish, a little bit bearish, not very bearish. Probably always in short. Not great follow through after the 23 reversal, but the bulls had their chance and were unable. They're trying again 24, but not a strong enough looking bull bar to undo 23. So still probably trying to go lower. Bull closed near the moving average. Bears are selling here. Bulls need to get strongly above the moving average, which I think they will at some point today, but this is not yet a good buy setup. Sell the closed bears again, made their 1 point scalp. A low on short, a pullback from the 23 bear breakout, but a pretty good looking bull bar, not a very good looking sell signal bar. I am back to flat. My last trade was a short. When the market's in a tight range like this, I'm only scalping because, betting that it's going to begin a bull trend or a bear trend, low probability bet. Sell the closed bears 11, sold more higher. And what do you think they're going to do when the market gets near the 11 close? A lot of them will buy back their shorts. Some might hold, but a lot of them will be relieved to get out, break even on their first short, and with a profit on whatever higher short they got. That means there'll be buyers probably around the 11 close. Other bears are hoping for the breakout down to the next support level. But right now we're at the bottom of a 15 bar tight range, and bears are trying to take profits here. Bulls might buy. Bulls unable to get above the moving average. They've tried many times here, 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 here. Probably buyers 13 low, but they need to stop down here because we have magnets below and we may get all the way down to the magnet. Just like sell the closed bears are okay if they put a stop up here. They had to sit through a big reversal before they got their money. And buy the low bulls 11, same thing. There's a risk that we could go down a lot lower. Bulls made their money. They buy the 11 low, 1 point lower. It's back above the 11 low. Not a good looking stop entry buy for a lower low major trend reversal. Still always in short and targets below. We got one target right here, the 50% pullback from yesterday's range. But we have the 50% pullback from the entire bull trend right here, and 60-minute moving average, and the first pullback after that breakout. So we get several magnets below. Lower low major trend reversal, but fairly tight channel and two decent bear bars here. The bulls would need to see a pretty dramatic bull bar 28 to buy on a stop above. The bears are not selling down here. They're buying back their shorts. They want to sell near the moving average, which has been profitable all day. For the bulls, lower low major trend reversal. Bear trend bull breakout, lower low. Wedge 111, but only a 1 tick bull body after two decent bear bars. Low probability buy, plus targets below. As bearish as this is, it's really not bearish compared to this. It still looks like a bull flag, a pullback from this bull reversal, cup and handle. The reversal is the cup, and the pullback is the handle. Not a strong stop entry buy, only one tick full body and two big bear bars. The bears are low one short below 29, but I think most bears are not going to take that short. We're getting too many reversals. Limit order bulls making money, stop order bulls making money. Bears want to sell near resistance moving average. Not many bears willing to sell below bars at the low of the day, especially below bull bars. Surprise bars often lead to a measured move based upon the size of the body. Almost there. Sell at close bears 23 needed the market to fall 17 ticks for them to make 4 points. It did exactly that. So a lot of the bears bought back their shorts 4 points down. Bears unwilling to hold. So probably we're going to get a swing up, and the market tried here. It's trying again here. Bulls need to break strongly above the average price. For bears to sell below 30, I think they need a strong bear bar because it's low, it's below the moving average, and they know they're probably bulls below 30, below 29, below 28. Bears need a strong bear bar. 30, they're trying to scare the bulls from buying the 30 low, the 29 low, the 28 low. Not a good short, not a good buy. Probably buyers below 30, 29, 28. Bulls trying again to get above the moving average. Too many attempts. The bears eventually are going to stop selling the moving average. We're just getting too many big bull bars near the moving average. The bulls keep coming back, and at some point the bears give up, and we'll get the successful swing up. Bears sell every bull close near the moving average, but this is one I would not take. We were likely to get 2 legs down after 23, and we did. Now we got potentially a wedge bull flag. Not yet a good buy, but it still looks like it's a wedge bull flag, bull trend, bear channel with 3 pushes down on the day. Looks like more likely to get a breakout to the upside than a breakout to the downside. Bad location to buy. Better to be buying below things or near the bottom, or buying after we see a strong breakout above the average price. Bulls trying to maintain that gap. $32 low, 30 high. Since not a particularly strong buy signal bar, plus following 2 big bear bars, we might have to test down and get a higher low before we can go higher. Close the gap by 1 tick, so it's a negative gap, but it's still a potential measuring gap. A lot of bulls want it to test down and form a higher low, maybe testing the 11 low again. But everyone knows the odds are we're going up. It's just a question of whether we've done enough to go up now, or do we have to get one more test down. So far, not a very strong rally. Bad follow through, 30, 32. Not a very good buy signal bar. But if the bulls get the breakout, then we'll probably go up for the next couple of hours. Not straight up, more likely, just like we did not go straight down, we'll probably have a similar look on the way up. Deep pullbacks channeling up. Magnet, top of the channel, fairly tight bull channel here. So we should get there even if we pull back first. It's interesting, I placed a limit order to get out exactly at 28.01. I bought and I got out, and it filled my order and at the high tick. And whenever that happens, I always assume the market's going to go higher. And if I'm selling, someone else is buying. If an institution is buying, they're buying because they think it's going higher. For the bears, a parabolic wedge, 1, 2, 3, at resistance top of the channel, but 7-bar bull, micro channel, low probability short. TradeStation and or GoToWebinar crash almost every day. So I'm sorry about that. Getting near the end of the third hour. This is the most important price right now. Open of bar 25 is the open of the third hour, and the bulls would like to have a bull body. So they want bar 36 to close above the open of bar 25. That means there's a magnet there as well, because the bears want to get the close below there. We've had 3 bear bodies, none very big. Bulls trying to get a bull body on the 60-minute chart. Parabolic wedge probably will form a higher low. I would like the low to this to come all the way down to the 11 low so that I'm buying low. Just like this never really looked particularly bearish, this does not look particularly bullish, and therefore it's a bull leg in a bear channel and a bull leg in what will probably be a trading range. In either case, it should have a bear leg, which means we should test down. The bulls are trying to get a strong bull breakout above the 34 wedge, but I think the bulls are going to have a hard time going much higher, like much above 23, without pulling back. I scalped out of my longs and I'm back to flat. I want to buy lower down here if I get a chance, maybe a 50% pullback. I'm not ready to sell yet. I think we're probably always in long. We're probably going above the 34 high for 2 reasons. One is it's a bull bar, a high one buy, and a bull trend. We have a resumption, a pullback, and a high one buy. And we know some institution bought from me up here. I sold here. The institution bought. He bought because he expects the market to go higher. It was reasonable for bulls to buy the 22 close. Pretty good breakout. And whenever the bulls do something reasonable, they're usually able to make money or avoid a loss. They've already been able to avoid a loss. They buy here, they buy more above a bull bar here, and get out at 50%. They were able to do that. However, I think they'll probably make money. So I think we're going at least to the 22 close so they can get out break even on this buy and with a profit on this buy. Still might come all the way down here first. The buy signal bar high, the 11 low. We're back in that tight range from earlier, and we're again undecided, deciding whether we're going up to the 22 close, 23 high, or down to the 28 high. Tight bull channel, so a lot of bears are waiting to see if we get at least a micro double bottom before selling. And the bulls are hesitant to buy this high up when the rally looks like this. Bad follow through bars. Not a good looking buy, but the bears who sold the 34 high are trapped. They needed a 5-tick reversal and they got a 4-tick reversal. That increases the chances that they're going to have to buy back their shorts, and we may go a little bit higher. Bears giving up. Bulls want the higher low. This is similar to 23, a small version of it. The bears are hoping that it gets down to support, 28 high, 11 low. Bulls want a big tail on the bottom of the bar, and they want the next bar to be a bull bar. They want it to be a failed bear breakout and a higher low major trend reversal. Big tail weakens the bear case. We've had several bear breakout bars like this lately, where you get a big tail on the bottom. Here's one. Here's another. Generates confusion. Because there are magnets a little bit lower, we still could go down lower. If 44 is a bull bar closing on its high, the bears will buy back the shorts, the bulls will buy for a higher low major trend reversal. You can see a lot of bulls place limit orders to buy 50% down. The market has to go one tick below for them to get filled, which it did. This is the opposite of this. Bull breakout, reversal down, bear breakout, reversal up. If you buy, I think your stop, where it's tough, stop might be all the way down below 28. The bears might get a small second leg down, and there's room down to the 11 low and 28 high. Trading range for a lot of hours here now, 3 hours. We're starting to get bars above the moving average. Right now, I think we will not get to the high of the day, but I do think we'll get to the 22 high. We may have to go sideways more, but I do think we'll get up here at some point today. Higher or low, but still in a trading range. Still slightly more bullish than bearish. Not a very good buy. It's mostly a limit order market, buying below bars below 46, buying more lower. I did not sell up here. Still always in long, which means more likely the second leg up, one pullback two. But a lot of bulls are concerned. They thought the rally was so weak that we had to test lower. And a lot of them are hesitating. They want to see if it does get lower. 22 close. Open of the day. Both are magnets. The day will probably close around the open and be a doji day. These are the targets, open of the day and the 12 low, 11 low. Up to the target. We don't have to stop there. We might stop there. Surprise bar on the upside, so probably at least a couple small legs up. Even if we do rally up here, we'll probably close around the open of the day. The day's been a quiet trading range day. On the daily chart, it probably will be a doji day going into tomorrow's vote on the budget and the government shutdown. When something like this happens, I just hit buy the market and I scalp out 1 point. I'm back to flat. Bears want another second leg trap. One pullback two, trapping bulls. One pullback two, trapping bulls. One pullback two, trapping bears. I think we're probably going at least a little higher. The bears should have been able to get the market to come down to the 12 low and 28 high, and they were unable. And therefore, I think the bears are going to be hesitant to sell. Follow through bar, fairly prominent tail, probably not going a lot higher. but big enough breakout, probably at least a small second leg up. Second leg trap, possibly one pullback two. But I think the bears will need at least a micro double top. Next target, high of the day. Probably sellers above 23, sellers above the high of the day. Micro double top, second leg trap, but just up too strong. So I would not sell below 57, even though I think we're going back below the open of the day at some point. Micro wedge might get a little pullback here, down possibly to the open of the day. Who's going to buy up here? You know, the bulls bought 57 low, but I think they'll scalp. I would not buy above 59, even though it's a bull bar and a bull trend and we have a target above. What happens if we break above the high of the day? Well, today's basically a trading range day. You can call it a head and shoulders bottom, left shoulder, right shoulder, left shoulder, head, right shoulder, higher or low, major trend reversal. But the rally does not look like a resumption of a bull trend. It looks pretty much like the opposite of this. This was a bear leg in a trading range. This is probably a bull leg in a trading range. And therefore, I think we're probably not going to go up all that much from here. And I still think we're going to test back down to the open of the day before the end of the day. Failed breakout of the high of the day, which makes sense. It was unlikely to break far above the high of the day. This was a failed breakout above the prior high, and it led to a swing down. This is a breakout above today's high, might lead to a swing down, but not a very good stop entry sell. Would I buy the 62 low? No, but I would also not be selling with stops. If you're selling, it's better to be selling with limit orders above bars, above 61, above bar 2. Big up, big down, big confusion, probably sideways here. I said I thought the day would close around the open. That's why I put that line there. I still think that's the case. And I doubt that we're going to go very far up or down for the remainder of the day. Fell 5 ticks below 64 high. So the limit order bears made money. Tight trading range for 10 bars. You can call it a triangle. 3 pushes down, 58, 64, 67. However, I still think the odds are we'll close around the open even if we bounce here. Triangle, 50% chance the first breakout fails and reverses. 50% chance when there is a failed breakout, it'll be up. 50% chance it'll be down. Bears trying to get a bear breakout below the triangle. However, even if they succeed, the market probably will stabilize a couple points below and close right around the open. We're probably not going to go very far from here. Can we get all the way down to a new low? We have a new high, new low down here. Can we get all the way down here? Probably not, because the range is so big, it's unlikely that we'll get down there. We might get to the 54 low, but we'll probably end up closing around the open of the day. So we're probably not going down much further. You know, maybe to here, but we'll either bounce here or down here. So the rally low, 54 low, but still above the low of the day. Strongly down, but the bottom half of a trading range day and the bottom of a 3-hour trading range. So the math is not all that good shorting here. And I would not buy with the limit order because it's too late in the day. Also, it's surprisingly big, and therefore we're probably going at least a little bit lower. Everything's selling off. Look at ticks, fell to below 1,000. That's pretty extreme selling. Do I still think we'll get back to the open of the day? Probably not. I don't know that we'll have enough time to get there. What about getting to a new low? I think probably not as well. Most of the day was here, and I suspect that we'll end up here, in this trading range. For the bears, a lower high, major trend reversal, bull trend, bear breakout, lower high. Most major trend reversals result in trading ranges, not opposite trends. And we were at this price for a lot of bars today. So we'll probably stay right around here. Remember, on this upside down chart, I said yesterday's, well, this is upside down, so I'll talk about it in terms of this chart. Yesterday's sell-off to a new low was probably a pullback from this rally, even though it fell below the bottom of the bull trend. And therefore, I think it's likely that we're going to go up again. And for the bulls, they have a bull trend, a bull flag, a breakout of the bull flag, and now a pullback from this breakout. And they're hoping that this is the start of a trend up. Not a very strong breakout here. More likely, we're just going to go sideways here. Again, this is upside down, so I'm talking about it as if it's an upside down. I'm talking about it like it's an upside down chart, like a VXX or something. The opposite's true with the actual chart. Strong breakout. This might simply be a pullback from this bear breakout. And then now we have a lower high, major trend reversal, but a big magnet right here. Comparable to 12, comparable to 10. Not a particularly good buy. The bulls are hoping to get all the way back to the open, but I think instead we'll get stuck in this tight trading range for the remainder of the day. Trading range day falls below key support, reverses up, 11 low, 54 low, 43 low, and goes above key resistance and reverses down, high of the day. Bad looking sell, but end of the day, buying with a limit order, 75 low, has the added risk of time. You probably will not have time to scale in, and you could end up getting a big loss. So usually it's better not to enter with limit orders at the end of the day. Second entry buy, but two dojis and a fairly strong sell-off. Plus, we're in a tight trading range, and this is near the top of it. So I don't know if the math is worth it, hoping to get back to the open of the day. low two, bear trend, but normally a decent sell. But we're right in this trading range, and I think it's probably better to do nothing. You see it bouncing up and down like that. It's usually a big volume. Bar 78, usually the biggest volume of the day. Here, about, 85,000 contracts. Tuesday, big down, Wednesday, big up. Generates big confusion. Confusion usually leads to sideways trading. And so today was likely to be a trading range day. And then you add to that tomorrow's vote in Congress on whether to keep the government open. That's uncertainty, and uncertainty also leads to trading range trading. So today was likely to be a trading range day, despite yesterday's exceptionally strong rally. Daily chart, micro double top. We went down on Tuesday, up on Wednesday, and then a little bit down today. And that's just simply a reflection of the double top on the 5-minute chart. The bears have a lower high major trend reversal. But most major trend reversals result in trading ranges and not bear trends. So to me, we're pretty much neutral. We have a double top here, double bottom here, breakout mode into tomorrow. Tomorrow's a Friday, so weekly support and resistance are important. Open of the week, last week's high, obvious targets. All day long, we've been oscillating around the open of the week. I should have put it down here because it looks like we pretty much look at that. Low of the day, high of the day, open of the week, the exact middle of the day. It tells us that the market's paying attention to the open of the week, and it will pay attention to it tomorrow, especially in the final hour if we're within a few points of it. So far, the week is a doji bar. I think it's unlikely to be a big bull trend bar. Right now, it's probably either going to be a doji bar, like today, when it closes tomorrow, or we might get a big sell-off, depending on what Congress does with the vote. In any case, the two biggest bull trend bars late in the bull trend on the weekly chart, more likely an exhaustive end of the trend than the start of a new leg up. Strong enough, we might get a little bit more up, but probably not more up. Exhaustion, but really not all that exhaustive. You know, the bars are not particularly big. So the market is not too overdone. If the exhaustion is huge, the reversal down often is huge. But when the exhaustion is not particularly big, the reversal down probably is not going to be all that big. We'll probably test down to the bottom of the 2-week low. We came into the day with the sell-off at the end of yesterday. After 2 days of big down, big up, we were likely to go sideways. And we began the sideways toward the end of yesterday. Bar 1, possible wedge with 73 and 78, but a bear bar tight channel. I said I thought minor reversal and we would have to test back down, probably below 1, which we did. The bulls had bar 4 for a pullback from the breakout. The bulls saw this as a bull flag, a bull breakout, and a pullback, breakout, pullback, buy. But tail on top, tight trading range, buying high up in it. And I thought we had to get below the ledge low, 234, same price, and probably the low of the day. So low probability buy above 4, even though it's a possible low of the day. 6, not a good looking sell, but it led to a big swing down. 7, 8, a pair of bear bars. We should go at least below 4. 9, probably sell the close, but I doubt we're going that much lower because I think today's going to be a trading range day. Maybe we'll correct 50% of yesterday's rally. Maybe we'll get down to the 60-minute moving average, but probably not a bear trend day. The bulls tried to reverse up on 10. Good looking bull bar, but not compared to the 3 bear bars before and the tight bear channel. And therefore, most bulls want a second entry buy. They got it with 12, possible low of the day, but the bulls could not get above the moving average. They got above on 22, but no follow through 23. Big reversal, probably going lower. New low of the day, bar 28, but only a 1-tick bull body, not a strong reversal bar, even though it's a possible wedge. 1, 2, 3, possibly the end of the bear channel, bull flag. Bad follow through on the reversal up. After the bull bars, we had bear bars on 30, 32, 34, probably going sideways, which we did. The bears got a reversal down on 43. I thought we probably would test the 28 low or the the 11 low. And we ultimately did at the end of the day, but I thought we were going to do it here. The bears kept trying to get down and could not. Outside up 54. Looks like the bears are giving up and will go up higher, maybe to the high of the day. Reversal day, so probably not going much above the high. And you can see traders sold at the high. We got a triangle here, 1, 2, 3, 4, and the bears got a breakout. I thought we would try to close around the open of the day, but instead we're closing down around the 54 low back in the 3-hour tight trading range and below the open of the week. So right now the weekly chart has a bear body for the doji bar. Stop entries today, below 6 is really not that good. Above 12, probably a minor reversal. Above 21, same thing. Below 22, not good. Above 24, probably sellers above. Below 28, probably not much more down. It's a trading range day. Above 28, possible low of the day. Below 34 for a wedge, 1, 2, 3, double top, 25. I thought we'd get 2 legs up from the wedge bottom. Plus, this is a 6-bar bull micro channel, so probably buyers below. And here, not good stop order trading. Same with here. Up here, 62, you got a small wedge, failed breakout high of the day. I thought minor reversal and trading range likely. Once you get the trading range, then the bears have a chance at a sell-off. Not a great short below 62. Not a great buy above 68. Triangle, 58, 64, 67. 50% chance a breakout above a triangle fails. 50% chance when there is a successful breakout, it'll be up. 50% chance it'll be down. We got 71. Looks like we're going down. 72. We're probably going down a little bit lower, maybe to the 54 low, but probably not to a new low of the day. Buying above 74, failed breakout 54, failed breakout 43, breakout test 28. Probably not going up very much after 3 big bear bars. So not a strong buy. And not strong stop entry trading here. Buy the close, sell the close, maybe sell the close 7, probably, 8, probably 9, but probably not going much down much further. Buy the close 14. Well, if you put your stop below 11, maybe, but probably a minor reversal. And then through here, not good. First, decent buy the close again, maybe 55, 56, 57, but we'll have a hard time getting much above the high of the day since it's a trading range day. Reversal down 72, probably sell the close 73. 73, I would not, because we're at the bottom of a tight trading range and we'll probably find buyers down there. Limit orders, probably sellers above 1, possibly sellers above 4 as well. We have a magnet at the ledge 234. We should get there, But if we break below it, we should come back above it, which we did over here on bar 14. And therefore, traders can look for reversals up from below 4, or they can buy the 4 low and use a wide stop scale in lower. Limit order trading in here, probably buyers below 15, and then just all sideways in here. Limit orders, the bears kept selling bull closes near the moving average, and it was profitable, even selling 22, betting on the failed breakout, a second leg trap, 1 pullback 2. Probably sellers above 24, probably buyers below 25, 24, and 11. And then here, probably buyers below 34, and probably below 38 as well, but we could test down to the 11 low. So if you're buying, you need to stop down here. Tight trading range, very tight, not worth trading. Probably buyers below 57, and probably sellers above 22, 23, 6, and 1. Would I buy below 62, tight channel? I would not. Failed breakout high of a trading range today. Maybe buy a second entry buy, but to me it was not a good stop entry buy, and I would not. I would do nothing here. And then here, probably buyers below 75, probably sellers above 76, sellers at the moving average, but too late in the day to be trading with limit orders. As you know, I'm a physician. I still have an active license, and I prescribe myself antibiotics. I think I got the flu. I had a flu shot, so my flu was not very bad, but I think I now have a secondary bacterial infection. So yesterday I started myself on antibiotics. Hopefully I'll get back to normal pretty soon. Question, bought the 42 close for a 1-point scalp and used a 2-point money stop, was stopped out just as the market turned up. I didn't think the right stop was below the 28 because I'd be risking 6 points to make 1. One of the terrible things about trading range days is anytime you're buying up from the low, it's a problem because the correct stop is the 28 low. So if you're buying up here, your stop is down here. I set up here, I thought we would test the 28 high and the 11 low. So even though we had a pretty good leg up, it's still a leg in a trading range, and it has bad follow through. So I would not be buying at the low of a bear bar closing on its low, pretty far above the potential low of the trading range. So if you're going to take that buy, the 42 low, I don't think you can use a money stop. Trading ranges invariably make traders buy higher than they should and sell lower than they should. And they also somehow get traders to always use stops that are too tight. If you're buying near the top, your stop is all the way below the low. And you say, well, I don't want to risk 6 points to make 1. You're right, but if you're going to take the trade, that's the trade. You can risk 6 points and hold for a swing up. If you did, you would have made your, twice your risk. You buy the 42 low. Here's your actual risk. And that's 2 times your reward. So your idea was right that there were buyers below 42, and you were right that you probably had to risk below 28, and you took a chance by using a tighter stop, and that was, I think, what cost you the money. You knew what the right thing to do was, but you did not want to do the risk. And if you bought the 42 low and you were willing to add on lower on a test of the low, you would have made a scalp on the second entry. Get out break even on the first, the math would have been okay because the probability would have been high enough to offset a small risk reward ratio. Question, was it reasonable to trade short the high of bar 64? Yes. To make 1 point, risking 3. Depends on how you're going to manage it. So he's saying, can you sell 64 and put a stop up here and try for a 1 point scalp? I think so. Fail breakout of the high, a parabolic wedge rally. Odds are a second leg sideways to down. So I think the math was okay. Back to the question. I tried for 2 points and got stopped out break even. Okay, that's okay too. So he sold here, trying for 2 points, even though he made 1. He held for 2 and got stopped out break even. I think that's okay. The odds were it was going to be a minor reversal, which means sideways, and it was. So, I think you took a chance that maybe you make a couple points, and that's okay. And it didn't do what you thought it was going to do, and you get out break even, and that's okay as well. How many trades on average do you get out break even? Question continues. I hesitate doing that sometimes, especially when I've averaged in and it ends up costing me big. On a trading range day like today, I tend to take more trades that result in, tend to get out break even or 1 or 2 tick profit, 1 or 2 tick loss more than I would in a trend day, because in a trend day, the probability is higher that I'm going to make money. In a trading range day, the market's always making traders buy too high and sell too low. And the odds are it's not going to go much higher when you buy high. It's not going to go much lower when you sell low. And if you take those trades, you're probably going to end up with a lot of break-even trades or small wins or small losses. So on a trading range day, I probably end up with more small wins, small losses, and break-even trades. I know that I do than in a trend day, because in a trend day, I'm much more confident if the market goes against me that it will ultimately go my way. So I'm willing to sit through losses and just rely on my stop and even add on, confident that it's going to go my way. Today is a pretty nasty day with the reversals and the size of the bars. Big bars mean wide stops, big risk. Trading range day, so small reward. Terrible risk reward. And big bars mean you're buying high and the probability is low, and you're selling low and the probability is low. So you have low probability because you're buying too high and selling too low, and you have bad risk reward because it's a trading range day. There's not much profit. The bars are big. The risk is big as well. So it makes it really tricky to make money. For me, it's a good practice day. It makes me patient, not buying too high. If I buy too high, get out quickly if it does not quickly go my way. Don't sell too low. Try to enter with limit orders below things, try to buying below things, selling above things. You usually don't have much opportunity. When it goes below something, it usually goes up pretty quickly. When it goes above something, it usually goes down pretty quickly. So by the time you decide that it's worth taking the trade, it's too late to take the trade. The market has already reversed. All right, so tomorrow could be really interesting, right? We are way overbought. Strong bull trend, but we have a micro double top now, so we could start the sell-off. Weekly chart, these two bars tell me that we're probably going to correct soon. We could go sideways for a few weeks and then have one more leg up for a week or two, but I think we're going to correct either now or soon, especially given how overbought all the markets are. Monthly chart right now looks fantastic, right? We're rallying a FOMO market, fear of missing out. Traders are buying for any reason, but we still have another week or two left into the month. And even though it seems very unlikely, the month could still close on its low. Anytime you see a month like this with a big tail on the bottom, that means at some point it was a big bear month and it rallied at the end of the month. Anytime you see a month with a big tail on top, we don't have too many of those because the market's been in a bull trend. But like this, at one point it was a big bull trend bar, and at the end of the month it was not. And that's what I'm saying. Even though this is a big bull trend bar, at the end of the month, it could be a reversal bar. If the market reacts badly to the congressional vote, we could sell off quickly 100 points in the next couple of weeks. And all of a sudden, instead of a big bull trend bar, it'll be a bar with a big, big tail on top. How much more can we go up this month? Well, what do you think? It's the biggest bull trend bar late in a bull trend. I doubt we're going up much more. And to me, this is similar to 2000 in the internet stocks. I posted Qualcomm in the weekly update about a week or two ago as an example of a parabolic buy climax. I understand everything is really looking good, but I've been doing this a long time, a lot longer than the guys you see on television. They're good, but I have a lot more experience than they have. And you see these stocks. They're obviously a whole bunch: Boeing, Caterpillar, PayPal. They just look like they can go up forever. It's Caterpillar, Home Depot. They cannot go up forever, and this is crazy up. A few years ago, Tyson Foods. I don't remember what the symbol is. So let me check. Another one, Campbell Soup. Okay. Campbell Soup looked like it was going to go up forever, but it doesn't. A soup company it's just not going to go up forever. Let me see if I can find Tyson Foods. I forgot what the symbol is. TSN. Anyway, let me go back to this chart. Yes, they buy the first sell-off, but then once you go up again, you have a chance at a major trend reversal. Here, they took a second sell-off, and this is what followed. Tyson Food, they sell chicken. What are you going to do with chicken? How far up can it go? It went up 50% here, but it's not going to keep doing that. It's going to correct. Corrected some, right? And went extremely strongly up. But, it's going to correct. And all these stocks, Boeing, they make airplanes. It's not like, they invented the internet or invented cell phones. They sell airplanes. How much better are their airplanes today than, 6 months ago? They're not. This is not going to go on forever. And when it corrects, it's going to be pretty ugly. And that's true for everything. All these stocks that are going up crazy like this. The first reversal down, bulls will buy it. But then the next leg up, traders will start looking for major trend reversals. Okay, I'm losing my voice. Tomorrow should be really entertaining. We could it's possible we could get a huge bull trend, but if we have a huge trend, it's more likely down than up. So tomorrow we have the potential, depending on when they do the vote. My guess is they'll do the vote Friday afternoon after the market's closed, and Monday could be a really wild day. Anyway, we got some interesting stuff coming up. Hope everybody has a good night.